Hey, good morning, everybody. Can you hear me? Morning, Nick. Yes. Happy New Year, Dan. Good morning, good morning. Okay, fantastic. Morning, Michael. Morning, Jim. Okay, so we'll just give it a morning, Annie. We'll give it a minute or so just while people are coming into the room. Appreciate the patience last year, guys. It's been a bit of a nightmare with the updates they've done on the Click meeting, but it looks like we're here now. Happy New Year, Connor. No sound, Tim? Can everybody else hear me? You can hear me? Okay, great. It looks like it's just on Tim's side. Okay, fantastic. Okay, so we'll give it another 60 seconds and then we'll begin because we've got quite a lot that I want to get through this morning. I want to start off the first room of the year. We're going to look at some of the broader themes for the markets and the major economies this year that we're going to be looking towards. And then we're also going to go down and have a look at the currency indices. So while we're just giving it a minute or so, some of you will have noticed we changed the structure around. We're still going to give you the same information, but the way we're doing it now should provide you with a much clearer picture of the strength and the weakness of the currencies each week. So instead of doing it in the plus minus format, which I know some people have been using for quite a while, but quite a number of people were finding it confusing. They weren't too sure. So what we're doing is we're going to upload the actual indexes for you, or the indices, so you can see the key levels yourself in the actual markets. And then each Monday, we will go through the indices as well. We will analyze them first before we look at any other pairs, and then we will go and have a look at the pairs which are setting up or offering. I'll go through some of the pairs that I'm watching for the week ahead. So you can see not only which currencies are going to be strong and weak, but how that ties into the specific pairs that I'm going to be looking for in the coming week. So hopefully you guys will find this way a lot clearer, and it will give you an idea each week of exactly what I'm looking at and why I'm looking at it. We're going to start, because like I say, we've got quite a bit to get through. So I'm going to just start off by looking first of all at the economic data, as we always do for the coming week, and then we're going to look at some of the broader themes when we go and have a look at the charts for the year. So we do have the ISM non-manufacturing PMI coming out today. It's an important piece of data. It's a leading economic indicator, but it's not something that causes a little bit of let me just close down my emails a second. Now we've started. So it's an important piece of economic data, but it's something which near-term, short-term moves the markets. It doesn't tend to reverse trends or anything like that. So something we'll be watching out for today, but not in terms of trading it or anything like that. More for the for more of a macro view of what's going on in the US. And we're actually going to come back when we talk about the broader macro themes this year. We're going to come back and we're going to look at the PMIs a bit more, because they are, as I said, an important leading indicator. So this is giving us a clue. These give us a clue as to what to look for in the economy, maybe 12 to 18 months down the line. We have the Canadian trade balance again coming up as an important piece of data, because it is, but not something we need to concern ourselves too much about this week in terms of creating a plan around it or trading it. The first big piece of data this week, which we need to pay attention to, and which also one second, guys. Happy New Year, Amanda. I'll come back and answer your questions. We've got tons to get through, so if you've got questions, guys, save them to the end, and we'll come back to them at the end. Okay. The first piece of data that we need to consider this week is the interest rate decision coming out of Canada. Now, when we go and have a look at the charts, you'll see that there does look like they're setting up a couple of setups in these pairs, which we can trade the interest rate decision. So I will certainly be looking towards the CAD pairs and we'll analyze the CAD pairs, how this could be traded, and how I'll be looking at trading maybe one or two of these this week on the interest rates in itself. We have been through this before. We discussed this in a previous webinar for, I think it was a US interest rate decision, I can't remember. But the same principles apply, but the more we go through this and we consistently look at these setups as the interest rate decisions appear, you guys will be able to get a good understanding, and it will drill this into your mind so you can go away and trade these correctly yourselves. Okay, so this is the first piece of data we need to consider, and this is something which I'm going to be looking at providing an opportunity in terms of profiting this week. We have Carney speaking also on Wednesday, the Bank of England governor. However, you can see that he's due to participate in a Q&A session. So this is not really something, they do have the power, as I always say, to move the markets, you know, from what they're saying. I mean, last week we saw that with the interview. There was Jerome Powell, Janet Yellen, and Ben Bernanke. They sat down for an interview last week, and that actually what was discussed in that Q&A did move the markets. But I would expect this one to pass pretty much uneventfully. So I'm not looking at this as being anything we need to consider really importantly this week. We do then have the FOMC minutes coming out on Wednesday. Again, it does have the ability to move the markets, but generally speaking, we do see these very often pass uneventfully because what comes out in the minutes here very often is already discussed in the press conferences and the statements which are released. So although this is something that could bring volatility, I would really use this piece of data this week to say, well, if I'm looking at trading dollar pairs coming into 7 o'clock on Wednesday, it's more a case of just making sure I don't have super tight stops on any trades that I'm looking at. You know, rather wait for this to pass, and then if I am looking at trading with a tight stop, come back on, you know, Thursday. So that's really the only way I'd be looking at the FOMC minutes this week. I'm not looking at any major moves from the FOMC minutes. We have Powell speaking on Thursday. He's due to speak at a lunch, you can see. So with Powell at the moment, with the ongoing situation in the US, which we will cover in a bit more depth in a minute, he has more of an ability to move the markets because the markets are listening very closely to what he's saying currently. He has been saying that we'll come back to this in a second, okay? Because let's finish the news first, and then we'll come back to we'll start off with the US as with the macro themes, okay? So we'll finish this up first. We do have retail sales on Friday. And we do have GDP, manufacturing production. These are all pieces of data which can cause volatility in the markets, but not something, again, that we need to plan around. The GDP here is on a monthly basis, so this is not the more important quarterly one. So again, nothing really that I'm looking at here as being a major market mover. The inflation data is, of course, important as well, but again, not something that can reverse trends. So looking at the data this week, really the only piece of data that we need to plan around is the Canadian interest rate decision, because we know very often, and we're expecting a rise, the market is expecting a rise in the interest rate, so this would be a strengthening of the Canadian dollar. As a rule of thumb, it doesn't happen that way every single time, but generally speaking, that's what we'll be looking for coming into this week. That's the play that I'll be looking at coming into Wednesday. We'll assess that in the chart, see how that can be played out. But this is the piece of data this week which we need to plan for in advance, because we know with interest rate decisions, there's a very good chance that the Canadian dollar pairs pretty much do nothing or correct into Wednesday. So if we are looking at trading the markets this week and we get involved in Canadian dollar pairs very early on in the week, we could end up either getting stopped out, okay, very early on, because of they can move in a strange way when you have these rate decisions, or we can end up being stuck in choppy markets and just tying up capital in places it doesn't need to be tied up in, and then therefore not making it available elsewhere. So the plan for the Canadian dollar will be essentially waiting until, pretty much staying out of these until Wednesday morning, perhaps even a couple of hours before, depends how the markets are setting up, okay? And again, we'll come back and look at those in the charts. So the first thing that we've covered these, we also have an interest rate decision out of Turkey this week, okay, on Friday. So if you are trading anything with the Turkish lira in it, just bear that in mind coming into Friday. In terms of the broader themes this year, so let's start off with the dollar, because this, of course, is the arguably the most important currency. And we can see that on an economic base, we're in this position at the moment where the US economy has been doing very, very well, and they've moved into a phase of tightening. So they are essentially doing two things. They are they're cutting their balance sheet, and they are at the same time raising interest rates through open market operations in the bond market. Now, what this means is all of this is deflationary for the US economy, which is higher for the dollar. And we can see this has been playing out into the end of last year. We are reaching a point, though, where when we go and have a look at the S&P 500, we've had this major sell-off, and we actually very briefly went into a technical bear market, although it's not, I think there are better ways of defining bear markets, but 20% from the high is the technical bear market. That is the official bear market measurement. And we briefly touched in that, and you can see we actually rallied as soon as we touched that. Now, this is important because it is affecting the interest rate policy to an extent, or rather, traders have been worried that the declines in the stock market have not really been considered by the Fed and by Jerome Powell. So the markets were a little bit concerned at the recent press conference from the Fed, because what they stated was that they slightly softened their tone, and they did hint that they could be looking at raising rates only twice next year instead of 3 times. But the problem was the statement they made was that the roll-off from the balance sheet would be on autopilot, which the market did not like, and this is actually what caused further decline in the stock market. So essentially what he was saying was that he is not really going to change the pace of the roll-off of the balance sheet. Now, I don't want to get too deeply into all of that stuff, because we've got a lot to cover, and I don't want to, if anybody is out there is finding that confusing, it's not something that we need to go into very, very deeply. But what it basically points to is that in the meeting that I touched on earlier, or in the interview, sorry, I should say, where there was an interview, we had the sitting Fed chair sitting down with previous Fed chairs, Ben Bernanke and Janet Yellen, and Powell stated that he was essentially listening to the markets, which is what had concerned traders previously, and their concern was that he wasn't listening, he was going to continue aggressively tightening, and this was going to essentially cause a collapse in the stock market even further. So as he has started to say that he's listening to the market, this has been seen as what we call dovish, and this is essentially bearish for the dollar. Now, if he continues this rhetoric into this year, there's a very good chance we could see them even reducing that even more, perhaps even to 1 interest rate rise next year. And there was even talk as well as maybe even a cut. Now, all of this has been thrown slightly into the air because last week we had very, very strong jobs numbers. So the markets are now looking to see what Powell will say based on this, whether he's going to revert back to his kind of aggressive tightening stance based on this, and point to the jobs, the very, very good job data as a reason for doing this, or whether he's going to maintain his line of listening to the markets. Now, in terms of a technical basis, if we actually look at where we are, the reason why the markets have been very, very choppy is because we're currently sitting in what looks like the end of this major rally to the upside. So when we discussed this before, I'm just going to write something on here. Can you guys see this? Can somebody just tell me if you can see the drawing? Yeah. Okay. Brilliant. Thanks, guys. Okay. So you can see it looks like. Okay. Let me put it on a dark color for you. Is this better? Okay, great. Okay, we're doing blue. Okay, so you can see that we have been we have been approaching the end of what looks like this rally to the upside, i.e. 1, 2, 3, 4, 5. And if, as I suspect, the Fed starts to soften its monetary policy stance coming into the new year, which is what I believe will happen, then we could be on now to see the end of this rally to the upside. We actually already, if we look at this in a technical picture, we have, as of last week, broken down below the low over here of the 96.04. And the reason this is technically significant is because this is change this to orange. This is, of course, the low which denotes this double top pattern, which is a reversal pattern in the dollar index. So as soon as we break down below here, this is what denotes this. We have actually bounced from here since. However, I mean, ultimately we are in a range. Okay, we go into this week with more of a bearish bias on the dollar index because of the confirmation here of this double top pattern, which is a reversal pattern. But if you look at it in the near term, we are actually still sort of in this sideways pattern here, but looking potentially for further declines because we're looking at the end of this move here, 5 waves down. Now this could actually bring us all the way down this year. We could be looking at, assuming that this double top actually continues. First of all, we'd be looking down towards the technical, down towards the area of a technical double top target, where you take the breakout point. Okay, you can measure it to the headline, to the head, and then to the downside. So we're looking at 164 points to the upside. And we have roughly 164 points all the way down to the 94.39. So there's a very good chance we could be coming down to the 94.39. Let's just see if we've got a... So let's measure this all as 5 waves up, because we know when we have an impulse wave, we can measure the whole move. That would bring us down to the 382 here. So generally speaking, we would probably be expecting a bigger pullback, possibly down to the 50 or the 618, okay, or even a bit lower. So in terms of what we're looking at here, at least for the time being, I'd be looking down, again, assuming that this double top pattern doesn't fail, be looking down towards the 94.39, but possibly, depending on the rhetoric from and the actions of the Fed this year, if they do soften significantly, we could be seeing this coming all the way down, and this would actually be the start of a larger correction. Now, the reason it would be a start of a larger correction is because we can count from down here, 5 waves up, 1, 2, 3, 4, 5. So what do we know about waves? Well, if we have 5 waves up, this is an impulse wave. So we should be expecting, even if we have 5 waves down like this, okay, we should be expecting 5 waves up to be followed by 3 waves. Something like this. This will likely be the move that I'll be looking towards this year. If we get, it really depends on what the Fed policy is, but this is what I'm looking for it to be based on what's happening so far. And then, of course, we'll probably have something like this. This would be a big ABC, and then we might find actually that this is where we have a big drop to the downside. We've got a lot to cover, so I don't want to go into this too much here, but this could be this third wave here. Historically, third waves are during times of serious financial difficulties. We saw this back in 2008, and I certainly don't want to be the person who cause a top to the overall market, but we are late in the business cycle, and it could be, although we will cover this as time goes on, it could be that this is a period of financial difficulty, and the wave that follows is the Fed, for example, coming back in and actually restart the quantitative easing program. But this is all at a later date, probably within 12 to 18 months. Okay, so for the time being, what we're looking at in the short term in the dollar, and of course this is important because of the bearing the dollar has on other currencies, is I am looking for this near-term correction to take place, and this as being the possible end of this 5 waves. Coming down in this area, we could even see this pattern, which I'm sure you'll all be aware of. We have this kind of double head and shoulders pattern. So we could be looking at coming down in here to form this head and shoulder, and then up with an ABC to finish this head and shoulder before the head and shoulders. And this would be, I mean, this would be quite a significant devaluation of the dollar if this were to occur. And again, it's not something we need to worry just yet. Okay, we can talk about this as time develops. So that's the bigger picture for this year as it currently sits. Let's go. In fact, let's go on and do the euro first as well for the larger picture. So if we're going to have a look at, and then we'll once we've done the bigger themes, guys, we'll go and actually look at specifically what I'm looking at this week. In the euro, we do have the fact that kind of conversely to what we're seeing in the dollar index. This is the euro index, so it's exactly the same as the dollar index, but this is for the euro instead. We have this similar pattern, okay, with the 5 waves down, and you can see from the top here 1, 2, and then 1, 2, 3 triangles as we find in 4th waves. 5th wave down, okay, this is the 3rd wave, the 1st wave, the 2nd wave, then we have the 4th wave ABC, and then we have the final very choppy corrective 5th wave, and we're in that point where we've actually formed this reversal pattern in the euro. Yeah, we'll come back to that, Connor, 1 second. We'll go through this at the end, okay, Connor? So we've had this reversal head and shoulders pattern in the euro index, and what this is pointing to for the time being is a reversal at the end of a 5th wave. Okay, so in terms of the euro, what we could be seeing very, very soon, and certainly this is why we go into this week with a bullish bias on the euro, is if this is a 1, 2, 3, 4, 5, and again we can measure this back, there's a very good chance that we could see the same happening inversely in the euro, where we come in with a 3rd wave, a 4th wave, a 5th wave, then we do something like this, okay, and then we do something either maybe up to the 786 or the 386, and then we come back down in this area like this. So this is the technical bigger picture that we're looking at now. What could confirm that, or what could be the catalyst to drive this? Well, we did have the ending of the net asset purchase program, or rather the net purchases under the asset purchase program for the ECB in December. So this is a form of, essentially a form of tightening, and this will actually, as inversely to what would be going on in the US if we get a kind of a slight, not necessarily loosening, but a more kind of softer rhetoric, we should see this playing into the euro and actually increasing the value of the euro now that the net purchases have come to an end. Okay, so in terms of the 2 big macro themes going into this year, it does look like we could have dollar weakness coming into this year with this big correction that we're seeing, and that would very easily be catalyzed off the back of a softer approach from the Fed. And inversely, as we have this not quite tightening of monetary policy, but it's a form of tightening, we should see this actually not only benefiting from a decline in the dollar, but having that added weight of the net purchases being stopped in December. Okay. Now, in terms of the British pound, The British pound is in a similar position to the euro in the sense that if there is a decline in the dollar, we should also see this pushing to the upside this year. It does again look like we have in the pound, it actually looks like we have a big correction already taken place. So, for example, you can see we have all these moves up in this area. Okay, this looks like the impulse wave. It looks from here like this is all part of one move. And then the 1, 2, 3, 4, fifth wave coming into an end over here, looking like potentially an A, a B, and then looking for a C wave up in this area. And this would again fit in with the devaluation of the dollar this year, if that is to take place with the Federal Reserve. Now, the one slight issue, of course, with the UK is we do have the ongoing Brexit negotiations, and we are looking to leave January, February in March, at the end of March. But the deal that has been put on offer by the UK Prime Minister is a bit of a it's a bit of an outlier in the sense that it looks like it could be rejected. If it is rejected and the UK goes for a no-deal Brexit, we're likely to see a bit of a knee-jerk reaction to the downside. But we may find, if there is going to be one of the questions that probably should be asked, which I don't see being asked in the political sphere, we're not going to get into, because frankly, as traders, we're not that bothered about what politicians are saying. We're looking more towards what the central banks are doing. We don't really want to get caught up in that rhetoric because it just comes with increased emotions, which we're just always trying to get rid of when we're trading. And we may actually find that the question that starts to be asked within the next 12 to 18 months is not so much will the UK be worse off or better off outside the EU compared to the EU. You hear this a lot. People say, who's going to be worse off, the EU or the UK? It may come to the point where the question is asked, is the UK going to be able to navigate a global problem or a global recession, let's say, better inside the EU or outside the EU? That will probably start to become the question over the next 18 months. I believe, anyway, that's the question that should be asked, because that is what could be on the horizon within sort of the next 2 years. And of course, that will have a big impact on the UK economy as well, since the UK economy is basically it's essentially the US economy on a smaller scale. So if the US economy has problems, the UK economy will have problems as well. In terms of the Australia and New Zealand, one thing I want to show you as well, which feeds into this idea that we could have in the next 2 years some potential issues, and that is if we go and have a look at the Chinese PMIs, which we touched on earlier, you can see that if we go and have a look at the business surveys coming out of China, we did have very recently see if I can find it. We did have here on this month, on January the 2nd, the Caixin PMI. When you look at Chinese business surveys as leading economic indicators, you want to use the Caixin services, formerly HSBC, not the government statistics, because the government statistics are not as reliable, shall we say. So you really want to be looking towards the private Caixin PMIs, and you can see for the first time since 2017 we have had a reading below the 50 mark. Now, when you're looking at the business PMIs, anything above 50 denotes a growth in the manufacturing sector, and below 50 is a contraction. So we're starting to see a contraction coming into the manufacturing sector in China. Now, this has implications for global GDP because of the role China plays in the world, but it also has near-term implications for the Australian dollar primarily, and also the New Zealand dollar. So in terms of the Australian dollar, we've had this big run to the downside. We did have this flash crash last week, which did affect the Aussie dollar, it will be interesting to see whether this kind of big reversal actually holds up. You can see we had this massive reversal week last week, or if we actually have this is just a spike up for a continuation down. If there is going to be a slowing of growth in the Chinese economy, this is going to be overall negative for the Australian dollar, and we could in fact see this decline to the downside. But if we also have, in line with that, a weakening of the US dollar, we could end up just seeing the Australian dollar and the New Zealand dollar sort of ranging this year. So again, nothing that we, nothing that we really need to discuss too in depth about that, because I want to get on to the what we're looking at this week in a minute. But generally speaking, the Aussie and New Zealand, they're kind of in this position where there are a couple of other problems, including the housing market in Australia, but generally speaking, we may just see them range bound this year. It's the euro and the US dollar and potentially the Canadian dollar, which could be the big movers this year. Now, Canada, of course, if we go and have a look at this on a bigger level, we'll wrap it up after this, because Japan is basically just in a deflationary period for however many years it's been in, a long time, so their policy hasn't really changed. We'll touch on it slightly because of its safe haven value, which is going to be important. But the Canadian dollar as well, you can see that we have this kind of large corrective pattern. I know, Mando, it's been the problem for you guys for quite a while now. We have this large corrective pattern in the Canadian dollar. The major problem Canada has is that oil has recently gone through the floor, as we all saw last year. And of course, this actually contributes a large amount to the Canadian economy. Now, let me try and find oil. You can see ever since we had this huge decline in oil, okay, this is going to have a negative impact on the Canadian economy. We may start to see them reining in their current policy of monetary tightening, that is to say raising interest rates, as this starts to feed in to the economy. But for the time being, what I would be looking at in the Canadian dollar after this, you can see if we take this in a much larger scale, it does look like we have a 1, 2, 3, and this as a fourth wave. What do we know about fourth waves? Very often they are shallow in nature, okay, as opposed to wave 2s, which are deep. 78.6, deep wave 2, because of the psychology involved. If we measure the fourth wave, you can see we came right up to 382. So this has all the hallmarks of a fourth wave followed by the initial first wave down, because you can see here that we have 1, 2, 3, 4, 5, 6, 7 currently, which of course is not impulsive. You'd want to have 9 impulsive, okay, if you're counting 1, 2, 3, 4, 5, 6, 7, 8, 9, okay. If you can spot 9 waves, that's impulsive. If you spot 7, usually it's impulsive. 1, 2, 3, 4, 5, 6, 7, because you have an A, B, C. You have a 1, 2. So you have a 1, 2, 3, 4, 5, 6, 7 is usually a what we call a complex correction. Okay, it's like a double zigzag or something. So what this is telling me is this may not be finished to the downside. We may actually, in fact, not be. This actually may be the entire third wave. 1, 2, and then 1, 2, 3, 4, 5. This is the third wave, but it's not very impulsive. So the Canadian dollar is not entirely clear. We do know near term that we would be looking for a rate rise to this week on Wednesday, which again, you can see this massive move up. What we'd be looking for this week in terms of a setup, now we have this big momentum wave to the upside, and we're going to start to now get into what I'm looking for this week. You can see that this is providing us an opportunity for a potential continuation. So in order to get involved in the Canadian dollar pairs, and we'll look specifically at pairs, what I really want to see this week in the Canadian index is a correction to take place coming into Wednesday. This will give us the opportunity to measure this entire wave, which, as you can see, the problem we have at the moment is it isn't finished. Okay, it's still pushing to the upside, so we need this to come to an end and correct. And this would be the opportunity that I'll be looking for in the Canadian pairs this week. Okay, up into this area. This is the potential opportunity to make money in the Canadian pairs. Because of the decline in oil prices and because of where we sit in the Canadian index, I remain cautious about whether they are going to oh, thanks, Mandar. Pressing Control Shift R to get a trading view page. Okay, no problem. I'll try that actually. Thanks, Mandar. Because it's frustrating, isn't it? It keeps popping up. Yeah, that's actually, yeah, that's pretty. If that works, that's pretty good. Okay, thanks. So what we need to be considering here is this decline in the Canadian is one opportunity that I'll be looking at this week, and we'll go and see how this could play out in the actual pairs. Okay. Again, with Japan, the only thing I'm going to say about Japan, because there is really no point in going on about this in too much depth, because really we're concentrating on the near term anyway. But we have this major rally to the upside in the Japanese yen, and going into next year with what looks like globally a more uncertain or slightly volatile political landscape, we may actually see, and my belief is that the Japanese yen is going to be appreciating, possibly for the rest of the year, and I would be looking for this to perhaps come up to the, maybe even all the way up to the 0.100 area. Okay, looking for this over here, as we see this as a, albeit slightly choppy, perhaps, ABC. So I am looking at the Japanese yen to potentially be one of the pairs, one of the currencies which performs well this year, especially if we see that decline in the US dollar index, which I think we could be seeing this year. Okay, so I do like the Japanese yen, and if you hold dollars, certainly I'd probably prefer to be hedging or transferring some of those into yen this year rather than the euro, just because of the risks involved in the euro. But then again, we do also have risks in the yen because the BOJ is looking to actually suppress the value of the yen, because this is part of the problem, is that it's overvalued for the economy, and they really are trying to get the price of the yen down. This is their ongoing problem that they have. So in terms of the overall themes of the year, really the bigger ones that I'd be looking towards would be that inverse relationship in the euro and the dollar, with the additional focus of a slight tightening in Europe and a potential softening of the stance in the US being the catalyst drivers for that. Okay, and those are the things where we start off at the beginning of the year. Yeah, that's right. You also have the 2020 Beijing Olympics as well, but that's a little bit further down the line. So it's important to start the year like this and have a look at these overall pictures, because it gives us this ability as we go through the year to constantly reference back to this and make sure we're always on the right, on the right side, or we're capturing the big impulsive moves in line with the overall trends this year. That's what's going to make us the big money this year, and the rest of the year will be made, picking up money as we can as the markets are a little bit more choppy. So let's go and actually have a look at the just very quickly through the indices this week. You can see that we do have the US dollar is below the 97.20, so we are looking at further weakening of the dollar this week. The big problem we have at the moment, or it's not really a big problem, but the slight problem we have at the moment is, you can see it's right in the, let me get rid of this. It's right in the middle of the between the next key area of support to the downside and to the upside. So it's kind of neutral for this week. Okay, so I would be looking for further declines, but as it stands currently, it's kind of in a neutral bias. Okay, in terms of the euro, we have something very similar. We are above the 13280, so this is indicating with the target to the upside that this week we actually have a strong euro, okay, in relation to the actual dollar. Are we going to end up getting a pullback and a retest of the 13280? It is possible. Okay, we could end up having a move like this week. And again, what this is telling us is that this is essentially sort of neutral, although it is overall bullish as well. Okay, so we may end up with one more move down and a retest. But as it stands, and don't worry, when we go and look at the individual currencies, when we go and look at the actual pairs, I'll show you what this means and how this can be traded. If it sounds a little bit vague at the moment, that's just because we're sitting right in the middle of these two. Okay. In terms of the British pound, you can see we actually go into this week with a bullish bias on the pound, looking to try and capture this potential move up to the 1.2962 in the index. Now, reason being, again, we discussed this. If you look all the way to the downside, it does look like we have this 1, 2, 3, 4, 5. Okay, if we measure this 5 waves from the bottom, you can see that not only in this case is this the previous key area of resistance, which has been tagged multiple times, notably over here on the 3rd of October, it actually sits very nicely with the 0.270 Fibonacci extension as well. So this, when we look at this, this becomes a bit more clearer than, for example, the euro or the dollar. So if I was going to be looking for dollar weakness this week, the pound is certainly one, and you can see I've flagged it down here. We're going to come and have a look at. The pound is certainly one that this week I'll be looking to pair off potentially with the dollar, looking to see where the structure is. Okay, we may end up getting a pullback and a retest of the 1.2665. But either way, what I'd like to see is a correction take place first, and then this will be the move in the pound index. That this strengthening of the pound index is an opportunity I see this week alongside the Canadian pairs with the interest rate decision. So those are the two at the moment that I'll be looking at coming into this week. The Swiss franc is not as, again, nicely set up as the pound. We don't have that reversal back above the 1.0119. We're kind of sitting right in the middle as well. So again, we are kind of bullish on the Swiss franc. Why? Because we're above the 1.01190. This is telling us we're in an uptrend, as you can see. And the next key of resistance is the 1.0381. So I would be looking overall for further advances in the Swiss franc, especially if we are looking for declines in the US dollar. But it's not giving a concrete setup just yet. If we can get a breakout of this corrective structure here in the Swiss franc, this is when this would be the signal that we can go and look towards the Swiss franc pairs specifically, because if we can get this move in the Swiss franc index, this following impulse wave in the Swiss franc index should play out in the Swiss franc pairs as well. Okay, so we need a little bit of patience on the Swiss franc. The Japanese yen, we had this flash crash in the Japanese yen, and generally speaking, although this is a strong currency, in fact, the strongest currency, the problem we face is that very often when you have these flash crashes, you can go back and look historically, you just go into an extended period of correction. So I question whether we're just going to spend the rest of the week correcting, in which case we may find the Japanese yen pairs tricky to trade this week. The week after a flash crash in a currency is not generally a very productive period for that currency. So I would be, although I am looking for further advances in the Japanese yen, if you go away and you're looking at your charts yourselves and you're looking for trades, I would be not really looking to short the yen, but I'd just be careful that this may just end up being choppy this week, and therefore we could end up tying up money in the yen this week unnecessarily. The Canadian dollar we've already discussed. This is certainly this week something which I think could provide maybe even the best opportunity, okay, if it sets up like this, for the next rally to the upside before the interest rate decision. We'll come and look at the CAD pairs as well. The Australian dollar, we had this reversal in the Australian dollar, but overall we are in a downtrend. We discussed the slowdown in China, and it makes me ask the question if this rally is going to end up just turning over. I would be wary about taking any massive trades in the Aussie this week. What I would expect to see maybe in the Aussie is perhaps a C wave like this. Okay, so price comes down, retests previous broken resistance turning support, takes out the 7194, and then perhaps we start to get a break back down in this area and we continue the trend. So any strength in the Aussie dollar could be considered this week, but I would keep it near term. I'd look for the shorter targets, always making sure really at least you want to be looking for a 2-to-1 risk to reward. Okay, we cover all this in the course, those of you who've got it, for stop loss placement and profit targets, etc. But I would be looking for short-term trades in the Aussie in terms of any strength that we'll look at. Okay. Generally speaking, I don't see. We'll come back and see which ones I've highlighted. I'm not sure there are any Aussie pairs that I've highlighted this week as the better looking ones. Okay. So Aussie, I'd be a little bit careful on. New Zealand, we are actually currently still in a downtrend. As long as we're below the 0.6778, I'd be looking for further declines. And the New Zealand, along with the dollar, is looking like it could be one of the weaker currencies this week. Okay, we are actually overall we are a range. This is a big correction, and the risk with the New Zealand is that we end up breaking above and doing something like this. Okay, there is a couple of New Zealand pairs we're going to look at as well, and we'll discuss how that could play out in the actual pairs themselves. So that's what I'm looking at this week in terms of the individual currencies. How that could be playing out this week, if we come and have a look at the pound dollar, you can see it looks very similar to the pound index. Okay, so if we come down onto the 1 hour, since we've had this reversal back above the 1.26629, and I know this is a longer session this morning, it's just because we need to go through some of the broader outlooks for this year. You can see that it looks like we have to the downside over here 1, 2, 3, 4, 5, and then we have this sharp reversal. This does not look in the other way. When you get this kind of V shape, this is usually indicative of 5 waves down and 5 waves up. Okay, because otherwise, if you have the 5 waves down and you have a corrective wave, you have something like this. Okay, and then you look for the continuation down. So the fact that we have this V pattern in the pound dollar is telling me that this is something I'd be interested in, at least looking towards the upside this week. What I would like to see is I'd like to see a pullback first towards the 1.26629. If we measure this out, you can see it sits around the 226, so we don't really get any deeper pullbacks. Usually the 50%, the 618, this is where we start to get the better risk to reward. So the problem you can see here is if we do break down below the 1.26629 and we come to the 50 and the 618, we're actually going to be negating the reason for being in this trade or looking for this is because we're above the 1.26629. If we're above the 1.26629, we're looking for bullish patterns, and if we're below it, we're looking for the opposite. So by definition, if we're below the 1.26629, we can't be looking to buy in around the 50 or the 618. So what I would like to see instead in the pound dollar, it doesn't look like it'll be able to trade it on the 4 hours, okay, as we go through in the course with this pullback. Instead, what I would like to see is I'd like to see a correction take place here, like this. Okay, look for a corrective wave, and it might do something like this. And then once that takes place, what I'll be looking for in the pound dollar is I'll be looking towards the 1 hour. So we'll be looking for something like this. Okay, price comes down. Price comes down like this. And then we get this reversal pattern in the 1 hours. Okay, if we can get this kind of a price action and we bounce at the from this key area of support here, and we get this confirmation of a reversal of a continuation pattern to the upside, we get a breakout, counter trend, breakout like this. This would become the opportunity, because this is where we would actually get good risk to reward. Okay, can you see that? Let me put this on like this. So price is coming down. We get a reversal. Okay, as we go through again, I know some of you already know this stuff. Okay, others have done the course, And that's the kind of opportunity where if you cannot get the opportunity in the 4 hours, you can start to look for a shorter term 1 hour opportunity like this. And can you see how you can get an even bigger target here? So instead of a 2-to-1, you could end up, by trading on the 1 hours, you can end up with, I mean, this is probably, I don't even know, let's go and have a look. But let's just be conservative and say you got it from 50% and you have a stop loss down in this area below the low of the bull flag. You're looking at 51 to about 219. So then you're starting to get into the territory of about 4-to-1 risk to reward, which is when you can make the bigger money. Okay. So again, nothing is different here as to what is covered in the course and what we go through here when we're looking at bull flags and bear flags. It's just simply on the lower time frame. Is there any questions regarding that? Does that make sense to everybody? We've got a few more pairs that I want to go through that are looking good as well, but this is what I'd be looking for in the pound dollar this week. Again, you guys need to pull the trigger. Okay, you guys need to take responsibility for your own accounts. You guys need to practice viewing these when they appear, but I'm showing you here what to look for this week and what I'll be looking at profiting from. All good? Okay, I can't see anybody else ask the question. Okay, fine. So that's what I'll be looking for in the pound dollar going into this week. The confirmation and the breakout will be important on the pound dollar because the entry in the 4 hours or the large time frame just isn't going to be there with this. Okay. If we go down and have a look at gold, I do like gold as well. Gold we covered in the weekly forecast. You can see we have already a bounce from the 1282.51. I would be looking up towards the 1304.20 as the next move. If we go and take this as you can see we've already bounced from the 618. Okay, you can see how this came back. This is exactly what we cover in TFT course. Trading gold as we speak. Okay, good stuff. So in gold, I am looking at gold this week as being another market that could provide a good opportunity. What I would like to see, now we've already had this bounce from the 618, this looks to me like we're starting the first wave up, perhaps of 5. So what I'll be looking at in gold, similar in the as we looked at in the pound dollar. The problem is, if we get to, say we get a pullback towards the 50%, okay, and you decide, right, what I'm going to do is I'm going to place an entry order here, I'll place my stop loss below the swing low, and I'll be looking for a target up in this area. You can see that we have to respect the key areas of resistance first and foremost. So if you're in this position and you think, and you say to yourself, well, I'll get a pullback to the 50 and I'll trade up to the target, the problem you have is this, okay? You're going to end up risking 173 pips to make 223. So it's not a good risk to reward. The minimum, the bare minimum is 1 to 1.5, bare minimum. But really you want to be looking at least 2 to 1. And if you can get 3, 4, 5 to 1 trades, this is what's going to really build your account. Okay, and you do that by dropping down, as we just discussed, and we're going to discuss again here. So rather than taking the 4 out, and when you get really good, what you'll be doing is you will be taking the initial position. Say, imagine this resistance wasn't here, okay, and this becomes the target. You take your initial position here, like this, and then you will take your secondary position like this, and you'll move this stop loss up to here, and you will have probably a 6 or 7 to 1 opportunity because you're going to have 2 trades on, and you're going to end up with the risk will be something like, if this is, let's just say for argument's sake, 1%, okay, or 1x, could be 0.5%, 1%, whatever. The risk 1x gets moved up to here, and then this becomes, instead of 1x or 1%, it becomes 0.3, okay? And then on the second trade, you will have your 1x risk, okay, because you keep your risk the same. So your overall risk on both trades will be 1.3, and you will have, say, risk to reward in the first one of 2x profit, and the second one you might have 3x. So you start to increase your risk to reward by adding both. But that comes further down the line, okay? What you need to do is practice them separately, and then, you know, once you're doing this, you know, consistently, week in, week out, month in, month out, that's when you can start. You'll start to naturally put the two together. I would, don't try, if you're new to trading, don't try and run before you can walk though. So we already have, going back to gold, we already have the pullbacks, the 50 and the 618. What I'd be looking for here again is to drop down and see, because we know, this is why we have the levels and everything else, because we can see straight away what our potential is to make money this week. Okay, our potential to make money is a move from this area, okay, up to here, okay, and possibly even up to here, but first and foremost up to here. So the second thing we want to, yeah, exactly. So for the time being, Dave, I wouldn't be buying below this level, because if we're below this level, we should be looking for bearish patterns. Okay, so if we're below this level and we're buying, then we're breaking some rules here, because we're actually going against the overall trend. So what I would like to see here in the 1 hour, if we come down to gold on the 1 hours, you can see, if we look at this very closely, is there anybody in the room who's prepared to hazard a guess at what we could be seeing from the low of 4th of January? So from the low to the upside, does anybody have any suggestions what we could be seeing here? I want to get you guys not just talking, at you guys. I want to get you guys thinking about these things as well, because you need to be able to go away, drill this into your minds, and do this yourselves. Anybody seeing any particular pattern from the low of 1276? And don't be shy, guys. There's no, there's no egos in this room. There's no stupid answers. We're all here to, expedite your learning, and it helps a lot when people make suggestions, because it opens up different avenues. So inverse head and shoulders, Tim, not quite yet, Tim, but that's what I'll be looking for. Jake says a double bottom. Not a double bottom just here, Jake, because we have, so for a double bottom we would have to see, so a double bottom would be like this. So if we take this from the low here and the low here, you can see that rather than this, we actually have a low, a high, and then a low. We need a low, a lower high, and then a tag, and then a reversal for a double top. So we couldn't classify this just yet as a double top. It does look like a bear flag, Mandar, yeah, because you would be looking at this, yeah. So absolutely, that is forming a type of bear flag, okay. And of course, we have to ask ourselves, what's the highest probability here? Because it could be a bear flag, okay, could decline to the downside. But above the 128.251, I would say that this is less likely to be a bear flag, and this is more likely to be a 1, 2, 3, 4, 5. Okay, so what this means is, if we have 5 waves up and we have an impulsive move to the upside, we should be looking for what? A corrective move. And this corrective move would be somewhere down in this area. And it actually fits very, very nicely with what we're seeing here. This would end up giving us the head and shoulders that you described, Tim, or inverse head and shoulders in this case. So what we really want to look for, what I'll be looking for in gold, is a pullback for the right shoulder, okay? And this is the opportunity I'll be looking at. First of all, up to here, and seeing if we can actually break through to the 131540. Does that make sense, guys? So then we would be looking at 1, 2, 3, 4, 5, A, B, C correction, and then the next impulse wave, probably 5 waves like this, is what I'm going to be looking at paying this week. Okay, so that's gold. Again, can be traded, as we discussed before. In this case, the 618 is sitting right at the 1282. Could be traded just as an entry order. The technical stop would go down below here. Why? Because at that point, Mandar would be absolutely spot on in his assessment. If we break down below the 127605, this would indicate this is actually a bear flag, and in which case we do not want to be in this trade, because we're looking for moves to the upside. So that is a viable setup. The technical stop, if you're looking at trading this pattern, would be below the 127605. That would be the correct technical place to place it, okay? And you can see up into this area would be a 2-to-1 trade. 1x, okay, to make 2. So from this area up to here, you're probably looking at a 3-to-1 trade, which is great. This is the kind of trade I'm happy to take all day. If it fails, so be it. You only need to get, I think, about 25% of your trades correct in order to, if you're doing a 3-to-1 risk to reward. Yes, that is correct, Mandar. So remember what we discussed before, Mandar, because you were one of the traders in the live rooms with me last year, weren't you? Remember, when we approach the markets, we're looking at what the highest probability move is. Okay, this is what new traders often get themselves into a twist about. Is it a head and shoulders, or is it a bear flag to the downside? Okay, it could be. Sorry. they're both sell patterns. Okay, is it a head and shoulders like this, and this is a bear flag to the downside, in which case this will be the next move? Or is this, as I stated, a possible inverse head and shoulders, okay, with 5 waves up and a pull down? It could be either of them. Okay, and when we're trading, our job is to decide. The first thing when I was teaching you guys in the room, and everybody that I was teaching in the live rooms, what did I say to you guys? When you approach the charts, the first thing you should do is assess the opportunity both ways, because it takes you out of this mindset where you come to the charts and you falsely believe that as a trader, you have to know 100% what the market's doing and what it's going to do next. That's not the case. And new traders believe that they have to know what the market's doing and what it's going to do next. And what happens is, when they're wrong, because they have this belief, they get emotional and they get angry and they're upset because they view themselves as being wrong. What you should be viewing it as, this could be a head and shoulders to the downside, okay, and a bear flag, or it could be an inverse head and shoulders with a 1, 2, 3, 4, 5. Okay, well, how does that help? Well, then it helps, because what we need to do now is we need to decide, out of the two, what's the highest probability. So on the basis that we're above the 1282.51, on the basis that the dollar index is actually declining below the double top confirmation point of 9604 and is currently trending to the downside and is below the 9720, the move to the upside becomes more probable than the move to the downside. Does that make sense, guys? Just put a Y or an N in the box, something, guys, so I know you're listening and you're with me. It's a very important psychological point, because it removes the emotions from trading. Okay, if you approach the markets with an understanding and you analyze, okay, what's the upside opportunity, what's the downside opportunity, and then you ask yourself the question, well, out of these two movements, which one do I believe is the best possibility? When you're wrong and it goes against you and you take a loss, you just say, okay, well, I knew in the beginning that when I took this trade, I was trading on the basis of the highest probability, and the odds just did not play out in this case. So there's nothing for me to concern myself about. There's no point being upset or frustrated or worried, because I traded this based on the highest probability move, not on what I believe or I have an opinion of the market is going to do or do next, and not because I'm a trader and I need to know what the market is 100% doing now and therefore what it's going to do next. Okay, that's very, very important. If you get into that mindset of doing that, your trading life and your emotions will subside greatly. Okay, so that's what I'd be looking at in gold. Okay, so personally speaking, based on everything considered, I would prefer to take this as a 1, 2, 3, 4, 5 Mandar with a inverse head and shoulders, and this is where I'd be prepared to place my money, not on the other way around. Okay, Michael says, how to deal with such a big impulse on the way. Are you talking about gold, Michael? Okay, great stuff. So the way to deal with this on the way down is to essentially do what we just did. So the first thing you want to assess, Michael, is did you take the course? I mean, it doesn't matter if you did or you didn't, but we covered this in the course. You did. So in the course, you can see that let me ask you the question. Based on what we go through in the course, would you consider this a strong impulse wave to the downside? Exactly. So based on what we cover in the course, looking at this as here's the previous low, you see we came down, took out this low. Would you say this was a strong momentum wave to the downside based upon what we cover in terms of looking for confirmation? You would. So if you go back and you go in the course, you'll see that this, as this spikes down through the previous low, it actually fails to hold down in this area. There's no confirmation down in this area, Michael, that this is a strong wave. You see? Exactly. So this is that's the first indication we have that this impulse wave to the downside could fail. So you see how we're starting to put the evidence together. It's not just one thing. It's the dollar index, it's the structure, it's the previous support. Then it's looking at the decline into the support. We can say this is exactly. So we can look at this and say this is actually more of a false breakout to the downside. It gives us even more reason to look for longs in gold. Does it make sense? So when you start to put the piece, trading is not easy, but it's simple. Once you know what to look for and once you have a mechanical process, you can put the pieces of the puzzle together very quickly. Okay. So what we can say about gold, is gold 100% guaranteed going to move to the 130420? We can't say that. If we could, we would put 100% of our account on this and we would make tons and tons of money. We have to still accept the fact that whilst the highest probability move is to the upside, it can still fail, and therefore we have to still stick to our risk to reward management. Okay, so I want to move on to the others because otherwise we're going to go on for too long. We're already over the hour mark. So I am looking at this in gold. I would prefer, based on everything we've just said, to look for this move in gold this week. Okay, and be patient. Trading is not about jumping into markets every day. You're just going to churn your account and lose money. Wait for the setup to take place. Take your trade, okay, and then even if you take 2 good trades in a week and you put X % on your account, that's fantastic. There's going to be a next week. Once the move in the week is over and we put these levels, we take into account the volatility. Okay, so this shouldn't really be moving this week anywhere past the 1315 because that would be the upper end of the weekly volatility. Once it gets into this area, it's probably going to do nothing. So if it does this by Wednesday, then we take our profits and we stay out of gold till the week after. Okay, so that's what I'm looking for in gold. I probably, in all honesty, like gold more than the pound. Euro pound, we have this, needs to be caveated slightly with the fact that this is counter trend. Okay, you can see it looks like we have, and the reason that I'm looking at this now is because we have, by the looks of it, 1, 2, 3, 4, 5. So it looks like we're going to get an ABC down like this. Okay, so in the euro pound, for the time being, the pound is actually, as you can see, looking like one of the stronger. We kind of have a strong pound and a kind of slightly more neutral euro. We could actually see this playing out like this. Okay, could see this playing out where this pulls back down like this for a retest, and at the same time, I think what we could see is the British pound actually advancing. Okay, and this, in terms of the euro pound, would cause a decline to the downside. So in terms of the euro pound, we are now coming back and retesting the 0.89773. We can see we have a nice momentum wave to the downside from here. Okay, confirmed impulsive, unlike the false breakout we were looking at in gold. Now, if we put a Fibonacci on here, based on what we just discussed, what do we have to do in terms of time frames? If price pulls back in this area, we cannot short this. because we will be above the 89,773. If price pulls back in this area, what we need to be looking for is this. Okay, so if this price is going to stay below the 0.89773 and it's going to make this decline, what we need to do is, and nobody has said yet, but we need to look for something like this instead. Okay, if this is going to decline from the 89773 without pulling back this whole move, we need to wait for something to form in the 1 hours. It might bounce like this. And then this would be your opportunity. Okay, this is what I'm looking at. Okay, breakout, bear flag, possibly down to the taking the 4 hour target, I would say, or I mean, depending how how far you want to. We have more targets down here, so it really depends how far you want to take it down. But certainly a good trade you can see without needing to come all the way down to the previous support would be, you could be looking at about 20 points to make 60. So again, you'd be looking at a 3-to-1 trade if that setup occurs. Okay, so again, it's counter trend, so it's not, I wouldn't say it's one of my favorite. I'll summarize at the end which ones I prefer the best. Euro New Zealand is, we have a similar setup. It looks like we're going to get, although the New Zealand is currently weaker, and this is something we need to be careful about, it does look like there's a possible counter trend opportunity to the downside. Okay, you can look for the 270 target, or you can look for the bigger target. Okay, there's nothing wrong. I mean, these are the major targets that we're looking for. But if you just want to take a more, you might say, well, if I can take a 2-to-1 trade between here and here, I don't care if it comes down to the overall support or not. Okay, there's nothing wrong with that. Just taking the opportunity that is going to be more likely to succeed. So in terms of the Euro New Zealand, we have a similar setup. Again, the problem is we would be back above the 169832. Okay, if we were going to be looking for a trade in 4 hours, which is going to lead us to a situation where we have conflicting information, because it's be telling us to go long above the 69832. Okay, we should be looking for something like this. If we're going in this area, we should be looking at this, and therefore we wouldn't be selling. We wouldn't be looking to short there. So again, I'd be looking for a similar setup instead in the 1 hours. Okay, down either to, you can take the 4 hour target, because if you set a target in the 4 hours and you execute the trade in the 1 hours, this is what gives you the better risk to reward. And this would be similar to the euro pound. Again, it's a counter trend move to the overall move, guys. Okay, something like this move, or perhaps you even get something like this. Okay, 5 waves down, I'd be looking perhaps even towards the target. So again, this comes into another point. How do you know whether to take the 270 or the 6729? Well, if it does something like this, okay, and this is again what you need to think about. What do we know about impulse waves? 1, 2, 3, 4, 5. Well, then you would probably want to take your target here, because you can see 5 waves down. Okay. If you come down to the 270 like this, 1, 2, 3, then you know you're probably going to have final move down. So all of this feeds in. Once you start to learn this and you get an understanding for the structure, this feeds into profit taking as well as executing your trades. Okay, so that's what I'm looking for also in the Euro New Zealand, but tentatively, as I say, we are in this is a counter trend move, and the New Zealand is actually currently weak. So this is not high on my list. Okay, the problem we have with the New Zealand as it is that this could end up doing something like this. 1, 2, 3, 4, 5, A, B, and then that's the C wave, and then it comes up like this and stops you out. So it is an opportunity. Again, you guys are free to trade as you so wish, but I'll come back and we'll assess the best looking pairs at the end. Pound New Zealand. Pound New Zealand is actually setting up quite nice. Okay, it's sitting on the 88473. We're starting to get a breakdown from here. What I would definitely like to see first in the Pound New Zealand is a breakout. Okay, Pound New Zealand is one I have on my watch list for this move to the upside, especially if the New Zealand is going to be weak and the pound is going to be strong. I would not, however, be looking at just buying in here because we have, as you can see, you can take this off. In fact, this is probably more, if you have a flash crash like this, you just ignore the wick, okay, and just sort of pretend it's not there. So in one way, we have a sell pattern here, which is a descending triangle. So this is when you can start to reverse your positions, okay. If we're above the 88473, what are we looking for? We're looking for a bullish pattern to emerge that is tradable, okay. If we're below the 88473, we're looking for a bearish pattern to emerge, which is tradable. Now, what you might find is, and this is where the indices come in handy, if this declines to the downside and you see, okay, well, we have a sell pattern here, which has now been confirmed in the form of a descending triangle, and then we get a bear flag, this would become the trade to the downside. And this is how we are trading in different markets. We're not just saying, I think pound New Zealand is going to go up, and then we buy, and then it reverses and we lose money. We're able to be nimble in these conditions, and this is why we're structuring it this way. Now, if that is going to be the case, what I'd like to see first is, and again, this is all taking you through the process of what you can look at, is I would like to see this, okay? If the New Zealand breaks above the 6778 like this and above this major counter trend line move, and it could very well do because this is looking impulsive, then that's when I would start to, at this point, we can get a break up here, is when I would be interested in saying, okay, we've had a reversal in the New Zealand, and therefore, rather than jumping the gun and trying to short the pound New Zealand on the first sell pattern which we have, okay, because we're not going to short this because we're at the 8847. So this pattern is telling us go short, and the 8847, which is more important, is telling us to go long. So what I'd like to see is the failure to the upside in the New Zealand, and if it does do that, we should end up with a bear flag in this area, and this would actually form, in that case, the opportunity here for the week. Okay. Okay, so I need to get, guys can watch this back anyway if you're not sure. The US dollar MEX is one that I really like. Okay, so let's have a look at the US dollar MEX, and then I'll just quickly, we'll finish off with the Canadian pairs, and we've done a pretty mammoth session, but it doesn't matter, it's important. The US dollar MEX, if we have a quick look at the Mexican peso, we don't cover this in the thing, but we can, you know, if the opportunity arises, we took this off the list, by the way, to make way for the indices, but if we have opportunities arising in these, we'll cover them in the Monday session, so don't worry, okay? In terms of the Mexican peso, you can see that we are actually above the 05039, okay? So we're bullish on the Mexican peso this week, and we have forming a pattern to the upside, which is a bull flag, okay? I'd be expecting this to do something like this and then continue up. We're not looking to trade the Mexican peso, but this gives us an idea of the direction and the strength of the Mexican peso. Pairing this off with the US dollar, which is weak this week, and you can see that we have, when we actually look at do an assessment of the US dollar MEX, we have a really nice setup. Okay, there's no targets to the upside. You could actually make this, probably should be green like this. I'd be very wary about going long here, though. What I would like to see here in the Mexican peso, and this is in the 4 hours, so you can see you have an opportunity here. This is probably the one I like the most, okay, with gold. You have an opportunity here for an initial position, as covered in the course. So there's a lot more in the course for the $49, but we'll just cover very quickly. Looking for an entry order around this area in the 618, 50%. The technical stop goes above the swing high. And of course, you have the target to the downside, 0.270. Or we also have, for those of you who took the course, you have other Fibonacci targets down here at 1919. Okay, so I'd probably be looking down towards the 1919. Or if you want to be conservative and just book your profits, okay, you have the 270 down here. This is the kind of, the reason I like this the most is absolutely the Goldilocks zone. That's right, 50 to 618. It's called the Goldilocks zone because it gives us the right risk to reward if you're looking down to here. If you're looking further, you get an even better risk to reward, which is what we're always looking to do is to get as good risk to reward as possible, but without, you know, trying to look for a target below the next support area, for example, because we should be expecting that there's a good chance we can have a bounce here. So this is really the end point. We want our target to be above here somewhere. Okay, you know, it could be a few pips above, or it could be up here. It's entirely up to you guys and your risk appetite. This week, the reason I like this, and I'll be concentrating very closely on this, is because, as I said to you guys before, it gives you the opportunity to take an initial position. If you're looking down to the 19,198.40, you can either write this down or look back on the replay, which will be up. It's going to probably be around a 3-to-1 risk to reward opportunity. 3-to-1 risk to reward opportunity with technical stop up here means what? It means we only have to be right around 25% of the time. But on top of that, it should be able to provide us an opportunity for a secondary position as well. Okay, and these are the opportunities that can really pay. Okay. So I'll be expecting it to do something like this and go into this kind of wedge-shaped pattern. Okay, maybe it comes up, maybe it comes all the way up to the trend line, who knows, it doesn't really matter. And then we get, has to be covered by what we go through. You don't want any false breakouts to the downside, otherwise what will happen is you will get a false breakout to the downside, you'll move your stop loss down, and then it will come back and stop you out on both of them, and then it will do this, and then you'll be, you know, throwing your computer out the window. So unless you're proficient in trading or you have experience, I would say avoid the second one for the time being. Just paper trade it. Okay, so you can take the initial position somewhere in this area, the technical stop up here. I would say the 618 would give better risk to reward, and also it's just as likely to be hit in this case as the 50%, I believe. And so I'd probably be looking at the 618, and then if you're experienced, you can look, and if you've been in the room with me before and you're used to doing this, you can look for the secondary position on the 1 hours, and this should give you you might find that you have, let's say, technical stop up here, 70 points to make 280.74, which is about right, 3 or 4 to 1. So you could end up in the position, okay, where you move your technical stop down, okay, and what happens is this is 1x risk, this is 1x risk, but as you enter the second trade, you move this stop down, this becomes, say, 0.5x risk, and then you have 1x risk. So your overall risk on this trade is 1.5. If you're trading 0.5%, your overall risk is only 0.75%. Okay, and on the downside, you might find you have 6x, okay, 3 on each. So you'll be looking at 3% overall. Okay. Again, you guys are free to adjust these as you like. I would recommend 0.5%. If you've got a very small account, you might need to trade a little bit more, you know, in order to actually make better money. I have 3 accounts, then overall it's a large 6-figure amount, and so for me 0.5% gives me the staying power. You know, I can be wrong a number of times and not have huge drawdowns, which is important. So if you have a bigger account, I would suggest 0.5% per trade. If you have a smaller account, you might want to trade a bit more, but I wouldn't really go above 1.5%. I mean, to be honest, I would probably say 1%. Okay, if you want to trade a bit more. Because, you know, if you take 6% on your account in a week on one trade, you don't really need to be taking more than that. Okay, we're not looking to hit a jackpot here. We're looking to build our accounts consistently with good risk management. Okay, so don't try and hit the jackpot. You know, just build your account gradually. There'll be trade opportunities every single week. Okay, so just be disciplined with that. So that's what I'll be looking at in the US dollar MEX. This is the kind of trade where you can just take one. You can just do this one trade. If you execute right this week, you could actually make, without even looking at anything else, you can make good money. So the standout opportunity I'll be looking at this week is the US dollar MEX. Okay. Combined with the fact, don't forget that, just very quickly, we have oil advancing to the upside. This should also help the Mexican peso out, and conversely, oil tends to move inversely with the US dollar. So if the US dollar, if oil is going up, US dollar tends to be correlated to the downside, and if the US dollar is going up, oil to the downside, vice versa. Okay. So those are some of the pairs that I'm looking at. The pound New Zealand, we've looked at that both ways. Euro New Zealand, Euro pound, they're counter trend. These are my least favorite. Okay, I might even just skip these altogether. US dollar Mexican gold and possibly pound dollar in terms of the dollar pairs. I would be looking towards those three, preferably US dollar Mex first, gold second, pound dollar third. And finally, just to finish off, we'll have a quick look at the Canadian dollar pairs, see which one looks the best. So I would be naturally inclined to look at US dollar CAD because the CAD is weak. If we are expecting an increase in the Canadian dollar and an interest rate rise, the US dollar CAD is the one that might be affected the most. Now, in the interest rate decisions, don't forget these are only traded in the 4 hours because you have to allow room for the volatility with your stop loss. What's going on here then? Okay, so I don't know what's going on here. Looks like it's disappeared. Anyone know what the previous pullback was? It's probably going to be somewhere. I don't know exactly where it was, but can anybody tell me? Did anybody have the US dollar? 13564. Thanks, Dave. $3,564. Okay. What was the second one, Dave? I know there was 2 on US dollar CAD from memory. 3604. Okay. Okay, fine. So it looks to me like we've actually already finished the 5th wave. I'm conscious about you know, keeping you guys on the right track and making money and not taking the more risky trades. However, I also want to give you all the information so that you can do this yourself. When you have opportunities like this, there is an opportunity in interest rate decisions to trade these both ways, even though you're below the 35640. And that is because if you have a setup like this, for example, okay, and you're looking to pull back somewhere in this area, it may not come all the way back to the 35640. If you're in this position and you have a 1.35640 above the 618, then you can just take the 618, okay? Because you can take, you know, you don't have to actually put it up in this area. You're just looking to get involved. With the Canadian dollar, we very often we know that they can correct for the interest rate decisions, and so if we have that information between now and Wednesday, we can potentially look for on the 1 hour's counter trend trades to the upside. But again, this comes in time when you're more comfortable and you're doing everything else properly. Okay. For the time being, what I'd be looking for in the US dollar CAD, I've been taking it from the top here because just by eyeing it off, can you see it looks like we have everything in place for an impulse wave to the downside already. 1, deep 2, 3, very shallow 4, 5. What should we be expecting? A, B, C, and then the next move down. Now, whether this will be a third wave or a C wave, it doesn't matter too much. Because we have the 5 waves, we don't take the previous top, we take all 5 waves. So what I'd be looking for is just, if you are looking at trading this, and this will apply to all of the CAD pairs, I'll be looking for between now and Wednesday, or at least Tuesday evening, I'll be assessing the Canadian pairs to see how they set up. And on the morning of Wednesday, or in the before the interest rate decision, I'll be looking at potentially placing trades on them. What we want to see is this ABC correction into this area. Okay, that's when the technical stop can be placed in the 4 hours above the swing high, and it's just left through the interest rate decision. Okay, for the setup that you're looking to trade. Now, the key piece of information here, and it's some of you who were in the room before, when we looked at the US dollar interest rate decision, do you remember that I said the same thing to you guys, wait till Wednesday. I know some of you took it straight away, and the pairs we were looking at, the euro dollar, actually reversed completely, whereas the Aussie dollar and the pound dollar, if you had waited until the Wednesday, you would have seen that they were the ones that set up and they were the ones that ended up making money. So it's important to wait until before the interest rate decision to get involved. Okay. The same applies here with the CAD franc. So I'm not going to go through everything. We're going to wrap it up here. Okay, but it's exactly the same. 1, 2, 3, 4. It looks like this is finishing to the upside. We could probably take the whole thing. And again, you see how this is probably even a nicer setup in terms of the CAD franc. If we get this kind of correction into Wednesday and price pulls back to the 618, this would be a nice one because you have the trend line and you have previous support and resistance broken and you have the Fibonacci all in one place. You have 3 pieces of confluence. That's the area I'll start to look for this. But again, I need to see between now and Wednesday this happen, and then I'll be, if we're in this area before sort of Wednesday morning or Wednesday evening, that's when I'll be looking for this. Okay. Yeah, no problem. We've gone on. This is a massive session this morning. We are not, you're very welcome, Graham. We're not going to, the sessions will not be this long in the future. We will get through them within about 30 minutes to 45 minutes. But as for the start of the year, I wanted to cover everything so people can go back and watch this, and you can analyze the bigger trends yourself this week, referencing the video if you wish, to give us an idea of what we're looking at for the bigger picture this year. Okay. So has anybody got any questions? Appreciate your patience this morning, guys, because it was a long one. Thanks, Jim. Any questions? If not, just tap an N in the box or something for me, guys, so I know. Okay. You're very welcome, Michael. Yeah, that's right. I do still use the spreadsheet, Dave, but what we're doing instead is the data from the spreadsheet is reflected in the charts that we're doing. So it's the same information, but it's just a more visually, it's just easier to understand it played out on the chart as opposed to just giving the pure data, if that makes sense. So essentially, it's like this. We're actually bullet, because the whole point of the currency strengths is to show you the overall direction that you're looking at for that week, and then on top of that, when we were doing it in the evenings is when you have momentum in the direction of that overall move. All you have to do yourself, Dave, is we are strong on the CAD dollar, so as the CAD dollar is starting to correct, we would be bullish to neutral. Okay, and once strength comes into the CAD franc, okay, although we do it on the spreadsheet data, you should still see a breakout like this. Does that make sense? So what you need, what we're covering here is what you need to look out for. When I say counter trend and you're looking for the breakout, that is your sign that momentum has come in to the currency. Okay? And you can do it yourself on because when the currency strength show us that, what appears on the charts, most of the time we have a pattern. Okay, and if we don't trade it anyway. Okay, so I mean, that's it, guys. So we're going to wrap it up for this morning. You guys know what I'm looking at. So just to summarize, my preferences are for dollar weakness this week, mainly towards the US dollar MEX to the downside. I quite like gold to the upside, also looks quite good, and perhaps pound dollar. And the Canadian pairs coming into Wednesday, I'm going to look at trading 1, maybe 2, looking for strength, taking the interest rate decision setup. Yeah, you can create a spreadsheet. Yeah, you can create a spreadsheet if you want, based on what we're looking at. So your spreadsheet would consist of something like this, Dave. You know, Canadian dollar bullish, okay, qualitative notes, waiting for a correction, okay. Gold bearish, dollar bearish, okay, so looking for yeah, no problem, Mandar. So yeah, you can build out your own spreadsheets. In fact, I would encourage you to do that, Dave. I would come in the beginning of the week, see which current individual indices are strong. We're going to go through it in the Monday session anyway, but there's no harm over the weekend with writing down. For example, you can see clearly we're looking for further declines in the dollar index this week because the target is to the downside and we're below 97.20. That's what we're looking for this week. Euro, we are looking overall ultimately for a move to the upside. So hence why euro, pound, and euro NZD to the downside become more risky. This is why they're not favorites of mine. They're opportunities. There are opportunities, but they're not favorites. Okay, pound is strong, so we can straight away, you can see pound to the upside. Okay, we can start to consider pound dollar to the upside. We can consider euro dollar to the upside as well, but the reason we haven't looked at it is because if you look at the euro pound, the euro is weaker than the pound. So we want to be involved in the strongest currency against the dollar, which at the moment is looking like the pound. Okay. Okay, guys. So with that, we're going to wrap it up here. Thanks for your patience again. Just to reiterate, we are not going to be doing 2-hour sessions each Monday. They're going to be much shorter, much more succinct, and we'll go straight into the actual near-term charts and stuff, the setups for the week. Okay. So I hope you'll have a fantastic week. Those are some of the key ones that I'm looking at, but I'm sure there'll be many other opportunities in the market. So have a great week, guys, and I'll see you all next Monday. Bye for now. You're very welcome, guys. Take care.